Hi everyone, it's Paul Brown here from Wealth21. Put together a market update. This is being recorded on the 31st of March 2025. So firstly and importantly, any information in this video is just general information. It doesn't take into account your specific circumstances. If you've got any questions relating to your investments or your circumstances, please give us a call or seek advice from a qualified financial advisor. Firstly, let's just look at the index returns. Now, this is to the 28th of February 2025, so obviously a month ago, and the markets have been pretty volatile during the month of March. But as at the 28th of February, you can see the 1-year returns were pretty good for most asset classes, and the 5-year returns. It's interesting to note that Australian bonds and global bonds are actually still showing losses over 5 years because of the bond market correction that we experienced in 2022. And the best performing asset class over 5 years, 10 years has been global shares, pretty strong returns. Australian shares been pretty good as well, but global shares in Australian dollar terms, so that's unhedged, have shown the best returns over 5 and 10 years. So looking at Australian interest rates, obviously they went down pretty low in 2020. The Reserve Bank cut rates aggressively down to almost zero. And then when inflation emerged in 2022, there was a very aggressive increase in interest rates, up to 4.35%, and it was sitting at that level for a little while. We had a recent cut of a quarter of a percent down to 4.1%. So that's where interest rates sit at the moment. This is the inflation rate. Inflation rate got as high as 8%, or approaching 8% in 2022. It's moderated recently now and sitting just above 2%. Unemployment rate also spiked in 2020. And now it's settled, it's come up a little bit. It's sitting around 4.1% at the moment. The 10-year bond yield, again, it was pretty low 2020, 2021. And then as the Reserve Bank started increasing interest rates, bond rates increased up to, and they're still sitting at around 4.5% that's the Australian 10-year bond yield. Okay, looking at the Australian shares index, this is the ASX 200. These are 10-year charts, of course, and obviously we had a big drop in 2020, March 2020. It's actually 5 years, actually, since the COVID pandemic started in March 2020. Big drop in the share market, then a recovery over the following year and a half, I guess, and then it's been pretty strong of late, although we have had a decent correction in the last couple of months. It was approaching 8,600, the ASX 200, dropped back to 7,800. So, so a good 10% correction. It's come up a little bit since then. Let's turn to the US now. US, again, interest rates are very low, 2020, 2021. And then when inflation emerged in the US, the Federal Reserve increased interest rates pretty rapidly. Up to about 5.5%. They've had a couple of rate cuts. They're sitting around 4.5% at the moment. US inflation rate also increased. During 2022, it was up above 8%. It's moderated a little more, sitting around 3% at the moment. And the 10-year bond yield also, was very low, below 1%, and increased. During 2022, 2023, it's currently sitting around 4.3%. The S&P 500, so this is the top 500 stocks in the United States, 10-year chart, so it's gone up quite a lot over that 10-year period. Had that big correction in March 2020, and then a really strong recovery, driven a lot by the big tech companies in the US, the Magnificent Seven, as they're called, had a pretty decent correction in 2022. Along with most other asset classes, pretty much everything fell in 2022. But since that time, it's 2023, 2024, pretty strong run, and a decent correction. We've had recent volatility in the markets, so 10% correction, but sitting at a much higher level than it was even like a year ago. This has been interesting. This is gold. This is a gold ETF, which has like gone up an extraordinary amount in the last year or so. If you hold it in your portfolio, it's probably one of your best performing investments. It's probably up over 40% over the past year. But gold is really, I mean, gold is typically bought as a hedge against inflation, doesn't provide any income, but also it kind of says that there's uncertainty in the world because the gold is like there's demand for gold. So like this is a physical commodity, and so the uncertainty, geopolitical uncertainty, leads to the gold price going up. And final slide we've got is crude oil. This is the West Texas crude. It was up above $120, back in 2022. So sitting around $70 a barrel at the moment. If that oil price rises, I mean, that will lead to inflation, higher cost of living, petrol prices, and so on. So the oil price we keep an eye on as well. So there we go, a market update at the end of March 2025. If you've got any questions, please feel free to give us a call or send us an email. Thanks for listening.